So to your point, I mean, which of the three legs, if we're looking at a stool, which of the three legs, growth, inflation, jobs, is more at risk right now?
I think stagnant growth is there.
I do too.
Yeah.
I do too.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to this week's Market Moment. I'm Lee Mackey, sitting here with John Martfeld and Isaac Johnson.
Morning.
How are y'all?
Excellent.
Yeah?
Great.
How are you doing?
It's good. It's springtime in Arkansas.
Oh, yeah.
Where we have 80s and 30s in the same week.
And rain and sun in the same day.
Yeah?
It's great.
Yeah? Y'all have a good weekend?
Oh, excellent. Excellent. Cold Saturday. You know, storms Friday night. All good, though.
You know,
Life
this is
good.
This is shaping up to be a beautiful week, but we have Mach 1's second annual charity golf event this coming Friday, and the forecast does not look good.
Doesn't look promising.
You know,
now, that can change.
It went down from, I'm about to look at it,
90% chance.
to 85 this morning.
Yes.
It's not bad. That's not bad. So there's a 15% chance of
from the
awesomeness.
I back up to 90.
Hey, so
Oh, it's back up to 90.
is, you know,
Leave it alone
that
for a
famous that famous quote from the Oscar-winning movie Dumb and Dumber. So you're saying there's
So
a
you're
chance.
saying there's a chance. 1 in a million.
Well, we're glad that y'all joined us. We know that you know my mom watches.
Oh, that's
you know,
awesome.
so-
I've ran into several people in my neighborhood that watch.
yeah, that's awesome. You know, my
That's
mom's
good.
my mom's favorite is John.
Well, she's my favorite, too.
So yeah.
Shout out to your mom.
Yeah, there you go. But for those of you who are new to the show, we want to say thank you. Be sure and like, subscribe, comment, all of those good things. If you're listening on a streaming service, be sure and save us as a favorite. We would like to be a regular part of your week. But this morning, what we want to talk about is just throw out some questions. Zoe, our producer, does a great job of putting together content, and sometimes, when we wing it, she distances herself from us. But this morning, we've got several questions that people have asked that are kind of trending as well, and I just thought that we would run through some of those. There's a lot going on.
Oh, yeah.
In the world.
Ton.
We have, at least here domestically, earnings season started last week. Banks started reporting, and I think most all the banks reported pretty decent earnings. Wells Fargo was one that was somewhat, lagging their estimates. But this week we get really into earnings. Tech companies start reporting later this week. So it will be interesting. The big news yesterday, which occurred right after the bell, was Apple's CEO Tim Cook decided that he was going to step down. I think effective September 1st, I think is when.
Pretty soon, yep.
Their head of, what's the word? Product development or what's the word I'm looking for?
I think you got
Equipment, infrastructure, something,
yeah.
Is going to be the new CEO. I think that he was the one that everybody was kind of thinking that would be. So, quick question for y'all. Companies change CEOs. They change the leadership all the time. Apple, of course, is one of the largest, if not the largest company in the world. What do you think? What do you think about Tim Cook's legacy? What do you think this means for the new Apple beginning in September?
Yeah.
Your thoughts?
Well, I think unbelievable legacy, but it's like coaches in the new NIL world, right? It's like CEOs in the AI world.
Yeah.
It's like, hey, I don't want to deal with this. I'm used to selling products, and now we're selling software, and now we're doing this and that. So, if I've always been a big, if Apple can, they're the best set up to win this AI thing because everybody's got one in their pocket, and they really just haven't done anything to push that forward. So I think it's probably a good thing to put somebody that maybe has a little bit more AI lean to try and fix that problem.
His name is John Ternus. He was the head of their hardware.
Yeah.
Okay. Which means the iPhone.
Yep.
iPhone, iPads is what he was in charge of. You really, it's a great analogy because Tim Cook did a great job. You really think about it. Steve Jobs started the company. Mm-hmm. Tim Cook has been the only leader of the company other than Steve. So this will be the third leader. But I think one of the knocks on Cook has been his reluctance to jump into the AI spending race. And great analogy with NIL with coaches. I mean, the coaches, at least in football, that have really, in basketball, that have really grabbed hold of the new world in college athletics are doing well.
Leading the race, yeah.
And the old timers just decided, you know what, I'm done. I mean, classic example, Nick Saban.
Yeah.
He just decided.
But here's the bad news about that. How many national championships has Alabama won since Nick Saban left?
What? Correct.
0.
Yeah.
And I think
Tim Cook has 0 national championships.
He does 0. Yeah, good. So yeah, that's true. The future is bright. That was a big chip.
But I mean,
Sorry, you were saying something.
No, I'm just saying. I agree. Obviously, things have to move on. They have to progress. And when Jobs left, the Apple stock kind of floundered for a while, right? And everybody thought, well, if with him gone, but I don't think. I mean, the future. Eventually, he has to go anyway.
Yeah.
It just was an announcement today. I think it came out of the blue a little bit. I'm sure internally they knew what was happening, but it came out of the blue for us. I'm watching their stock. I would like to see how that affects the stock because new leadership from a highly successful company with a awesome guy in charge. But yet,
Tim Cook's legacy, I think, will be somewhat dampened towards the end because of this AI issue. I think Apple's philosophy up to date has been, we're going to continue to provide the phone that's in literally, it seems like, everybody's pocket. We will just then host all of the AI from everybody. We'll give you the ChatGPT app. We'll give you these other AI apps, and we'll provide the mechanism by which you're going to get it. I think that there's a lot of pressure on them to create their own.
Yes.
And so, we'll see.
We'll see.
Because if the second that Siri can do what I use ChatGPT for, I'm never going to open ChatGPT again.
Correct.
Genuinely.
They've introduced some AI into, you can kind of see it in their messaging and so forth. But to your point, and maybe Tim Cook goes on to something, is that once they can provide everything within your phone, then why do you need, and again, I'm just propositioning this, why do you need Gemini? Why do you need anything else?
And this goes back to the Nick Saban analogy, which I think is great. But Tim Cook's 15-year tenure, Apple stock is up 1,900%.
Yeah.
Okay. That is going to be really hard to match. The next 15 years, if this new CEO is CEO for 15 years, I can't even fathom that it's going up another 1,900%, right? He's taken over this monster. And, there are opportunities, which you guys are highlighting, which could be the next thing that makes them go that next 1,900%. But Tim Cook did wonderful things.
Yeah,
Absolutely.
I mean, magical things for that company.
He didn't invent under his tenure, the iPhone was not invented.
Yeah, he started in 2011, so
That's
he was
correct.
after the first iPhone.
Right, but tremendous growth, tremendous opportunities there. All right, that was a headline that just popped up in the last 12 hours, last 18
few hours. Yeah.
Another big topic that we're going to be hearing about here in the coming weeks, and it's timely today because the new Fed chair appointee begins his hearings today.
Right.
And so one of the questions that we have is, what does Jerome Powell's exit from the Fed do to the stock market?
I'm going to lean on John for that one. I feel like you have opinions on this.
It is so overrated. Fed's role is so hugely overrated.
Yeah.
I think they have screwed up since going back to 2008 financial crisis when they freaked out, bailed out the banks, made the mark-to-market stuff, did all these weird things that we didn't do for 100 years before. And they worked because the interest rates were so low. But then when 2022, anyway, long story. I'm blabbering. I could do a whole segment on just this, but I don't think it's as big a deal as we make it.
Yeah.
Everybody thinks that the new chairman is going to be more aggressive to cut rates because Trump appointed him, and that's the whole thing. Trump's fight with Powell is that he's not cutting rates enough. So the new Fed chair is where I'm very interested in. Right, if he gets in, will he or will he not cut rates? Because the reality is with this Iran war and inflation now triggering back up, it's not prudent to cut rates right now, right? So I mean, like today.
Sure.
So even though maybe they could have earlier, they really are going to be in a pressure point now. So I think the noise is going to be about the thought that the new chairman is going to lower rates right away. Just that's what Trump's, he's going to be a Trump robot, and I don't think that's going to happen. So I think that could affect the markets more in a negative impact, that the rates don't go down right off the bat, than just what happens to Powell.
It's funny. The first thing you said is like it kind of gets blown out of proportion a little bit. It's not as big a deal. And I was listening to another podcast talk about it the other day, and it was like saying they used to publish interest rate changes in the newspaper, not even on the front page, and now there's a press conference.
Yeah, exactly.
Like it's just blown up into this like data point that we focus in on.
And I think that to that point, I agree with you that it's overblown, but you can't ignore it.
No. It's part of our everyday life.
And the question was, does it affect the stock market? So regardless of whether we think that it's overblown, whether we think that I don't think that Jerome Powell's exit affects the stock market.
No, I don't.
In and of
either.
itself.
No.
I think that the new guy, Kevin Warsh, who brings an interesting background to this position. Do I think he's qualified? Yeah, probably so. It will be interesting is if the Iran conflict is still going on, if we still have oil in the $90 to $100 a barrel range, by that, I mean, that's another month and a half from now.
Yep.
You will begin to see it trickling into inflation. And so there will, but to Isaac's point, I don't think he's necessarily going to come in and on day one announce, I'm cutting rates. I think the world wants to see what his commentary is. What is his
philosophy?
Yes.
Yeah.
And so to your point about the press conference, I think those have taken on the life of their own. I mean, typically at 1 o'clock Central Time when they announce, the Fed decisions, the markets don't move very much. When the press conference begins, it's typically when you see a lot of movement. Yeah. So I think the U.S., the economists and so forth, the markets will be more interested to see what his philosophy is.
On that note, like if he walks in day one, cuts rates, right? No question. Is that a bad sign for the market that he's not paying attention to any outside data? He's just cutting rates.
Oh yeah,
to cut
I
rates.
think that would be a problem.
That'd be bad.
I think so. Yeah.
And you said bad for the markets. I don't
like the markets would go down because looking at it, he's just doing it to do it.
I don't know if the markets go down, but I definitely think it would be cause for concern because then you're really thinking, is this guy simply a puppet for whoever's in the White House? So, and here's the other interesting thing: he's going to be the Fed chair more than likely through most of the next president's term. So that will be interesting, whether it's a Republican or Democrat.
Right.
They're going to inherit Kevin Warsh, presumably. All right, great topic. The next item I want to bring up is we have midterms. Okay, we are in an election cycle.
We're always in an election cycle.
You are, but now we are.
No, the whole country
now we're what?
is.
6
That's
months?
all we talk about.
6.5 months away from midterms. Historically, the party in the White House and in Congress typically lose. It favors the other side. So, if that holds true, and the Democrats gain control of the House or the Senate or both, what do you think that does for the next 2 years?
If both, then we have a impeachment trial for 2 years, one after another, and nothing else gets done. And it's a joke. And like I get very, very. I don't care if you're left or right. Like I think they've all let us down. Like I don't care what side you're on of the aisle, and I'm not trying to like make anybody mad, but I think both parties are terrible. And I say that because there are so many easy things that could be done to fix this country that never get done. But if you have this and we've gotten to such a whatever you want to call it, I was going to say bipolar situation where you can't accept something the other side does. If you're on this side, even if it's right, you have to you always have to battle. It's always a battle. We can't just get things done anymore. And I think, if the House goes, which sounds like that's the leaning towards the House going Democrat, they'll do impeachment, but it may not get very far with the Senate and so on. But I just worry about, some people might think that's a good thing that there's nothing else getting done by Congress, right? So it may not affect the markets as much as it may not affect the markets that bad at all if there's nothing else going on.
And I don't want to get into too much of a political debate or an argument or a conversation, but with everything that is going on, if the Democrats had a solid platform to promote right now, I don't even think it'd be close. Mm-hmm. I think they, at this point in time, given what's going on in our country, I think they would run away with both the House and the Senate. Mm-hmm. But the problem is they don't really have something that resonates with a lot of people, and that's why you're saying, well, we think that they're going to take control. They may. In all actuality, and you go back in history, they should easily. Mm-hmm. But anyway, what were you going to say?
Oh no, I was just I couldn't find the chart that I normally pick up, but when it comes to the market, I try not to pay attention to like the short term stuff like this. Yeah. Like, an election's going to happen. We're going to have like 2 weeks of like both sides freaking out, and then it's going to go back to are people making money?
Yeah.
Right.
Yeah.
Are companies making money?
Yeah, it's about corporate profits.
And I tell you, the markets love gridlock in Congress. The markets
that's what
love
I was getting to.
Gridlock.
There's a chart that I have that like, if the House is this, but the president is this, what the market does,
right,
and vice versa. And it's always, if they're different, the market does great.
Yeah.
And if they're the same on either side is when it struggles because they change too much.
Yeah.
It's like you have to let the greatest country in the world do what it's best at, and that's making money for the rest of the world.
Exactly.
100%.
Yeah, if it's all about corporate profits, we're good.
Yeah.
Shifting to an economy question, do you think the U.S. economy is at risk for stagflation this year?
Yeah. So let's explain stagflation, right? So I wanted to bring up a actual definition. It's an economic cycle characterized by a rare combination of stagnant growth, high unemployment, and high inflation. Mm-hmm. Okay. All right. So the high inflation part is where, we haven't got down to that 2% target. You remember that long ago 2% target that we never hit. And now with the gas prices going up, that hasn't really hit the markets that hard yet, but it is going to. And if it continues, it has in other parts of the world. It hasn't here as much, but it will. High unemployment, we're seeing data points that are conflicting on where unemployment is going. You have bad reports followed by a good report, followed by a bad report, followed by a good report. So that might be a little thing in there. Stagnant growth. Yeah, we've been on this monstrous growth cycle, and we are slowing down. The 1 year over 1 year GDP is going down, right? So that's one leg that looks like it might be happening. The high unemployment, I'm not sure is happening yet, and the high inflation could be, but I'm not sure it might be just for a small amount of time.
Yeah.
So I hope we're not, but we're on the cusp of two of these three happening.
And that's one of the biggest pushbacks to AI is the job market,
right?
And so it's like we're kind of creating this possibility of, all right, growth slows, and people's jobs are taken over.
Yeah.
And if you add inflation on top of that, then
then you're right there.
Mm-hmm. Then it goes to what's high defined as, high inflation.
Or high unemployment. Yeah.
To me, I don't think inflation rate of 3.5.
That's not high. Yeah.
That is not high.
Historically not. Yeah.
Correct.
Unemployment
of 3 to 4. I don't think of that.
No, I don't think so either.
So to your point, which of the three legs, if we're looking at a stool, which of the three legs, growth, inflation, jobs, is more at risk right now?
I think stagnant growth is there.
I do too.
Yeah.
I do too. We've been close,
right?
A time or two over the last, several years.
Yeah.
I think that's the one that we need to look out for. Anyway, thoughts on that?
No, I would agree.
No, I agree.
So, finally, another economic question or another investment question: are U.S. valuations stretched compared to international opportunities? John, do you?
I think they've been stretched for years,
John,
in comparison to the international markets.
This was a layup for John. I knew when I asked this question.
This is actually written in crayon right here.
Yes, I knew John.
Well, if you
John thinks that since the Dow was at 22,000, that the markets have been overvalued.
It's crazy, but if you look at just one of the old things we learned when we were first getting into the business, the PE ratio, right? Price to earnings ratio of a stock, right? So the average S&P 500 for the history of the S&P 500 is around 15.5 to 16 PE ratio, price to earnings, right? So Europe's price to earnings is less than historical average. U.S. price to earnings is much higher than historical average. So therefore, if you just did that simple assignment, you'd say, yeah, the U.S. markets are overvalued. The European markets, for example, not using the Asian markets.
Based on the average.
It's just based on averages would be that way. But it's been that way for so long, and the U.S. markets just roar on. And it goes back to that wonderful animal spirit of the capitalism and U.S. markets and so on, which makes us just the greatest country in the world. And you look at like other places that are struggling with other things that they do. So yes, in a weird way, last year was the first year that international markets actually competed with U.S. markets in 20 years.
Sure. Yeah.
But if you go back 100, international markets actually outperform U.S. markets, and that's going back 100. That includes the Great Depression and so on. So you're like, if it reverts back to the mean, then the international markets will start to come back. If we're in a new world where that's never going to happen and we're just going to keep separating, then maybe not.
Yeah.
So getting back to my original question, do we think that U.S. valuations are stretched compared to international?
I mean, yes, but it's hard to like. At what point is it going to stop bouncing? Like anytime the U.S. market gets tested on anything, we get a month of like no growth, maybe 2, and then it's like the second there's even like a glimmer of like there was a tweet that the Iran war might be coming to an end a month ago, and the market was like, oh, done, and just the buyers are back.
I mean, to your point, I mean, 2 weeks ago, the S&P kind of got back to its average, and then in the span of 1 week, we went from oversold tremendously to well overbought as of Friday.
And it wasn't even like the war ended. It was like we're talking about it.
Somebody made the comment that we're not in a bear market. We are still very much in a bull market. Yeah. I mean, these little
blurbs.
And all the major indices entered correction territory for the most part. But
right at it,
That doesn't mean there's a bear market. There's a lot of bull markets that have corrections within them. Yeah. And we've probably experienced one.
We seem to go like one down a little tiny little bit and we zoom back up. Now the European markets are suffering more from the Iran war because of their oil that comes from there, and their a lot of their natural gas comes from Russia, and so I mean they've got a lot of things that are not as easygoing as it is for us. We're not as affected as they are. Anyway,
I was thinking that, and we're about to wrap up, but I was thinking that with all this Strait of Hormuz issues and the oil, how much of an education, if you were a college professor at economics and so forth, of like, well, if most of the oil that is produced in Iran goes to China, Russia, then why is our gas going up? Right. But it just shows what a global economy.
I had to spend a good 30 minutes on Google trying to figure that out a couple weeks ago.
Yeah.
I was like, this doesn't make any sense.
The flow of goods back and forth. And if you look at our trade, every month we get a trade number, right? How much we've exported, how much we've imported. And if you look at the imports, right, all of those go up in price when fuel goes up, even if the U.S. doesn't suffer personally the same. So we get hit with higher cost from imports, which is a massive number. If you look at our imports that come in this country, it's crazy. Yeah. So anyway, I would say that's maybe the number one way we feel the inflation.
The price of a barrel is a global thing. That's so like even if we don't use oil that's coming through the strait, we're priced at that same rate.
And that was my point. Is that the oil coming out of the Permian Basin in Texas? What does that have to do with a Strait of Hormuz being shut down in Iran? Well, pretty much everything.
Yeah, but it also has a little bit of greed in here because as soon as like they say, of a hurricane warning in the Gulf, right? And they're going to have to shut down one platform for a day. The oil price, gas prices go up. And it's like a little bit ridiculous. I mean, we have so much reserves, and it really doesn't hurt but they're like, but it pumps out so much gallons a day, and that affects. It really doesn't. Let's just use that as an excuse to raise prices. And not saying this is an excuse, but sometimes
I agree.
It is interesting. It goes up quicker than it comes down.
Big time.
Now granted, they have eased, and here. But yeah, they tend to go up a little faster than they come down.
Hey, I was going to tell you something, back to stagflation, key elements of stagflation. I just thought this was interesting. One of the triggers is like a supply shock, a sudden shortage of a critical resource. And it says the 1970s oil crisis. And I'm thinking, well, okay, right now Strait of Hormuz is a supply shock because of the oil crisis that's creating. Anyway, back to stagflation.
No,
we could be coming to one because of stuff like that. But anyway.
Yeah, well, We'll do this again in a week, and I'm sure there'll be
new news
and or old news.
Yeah.
But things, as much as they stay the same, they change. Yeah. So, well, we want to say thank you for listening or watching. Again, subscribe to the Market Moment. We'd love to have you as a regular subscriber. For Isaac and John and myself, we hope you have a great week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com.